Good day everyone, we are the Group 2. We discuss the summary of Module 2 and Chapter 2, the internal control. I am Bianis Belinda, the first reporter. I discuss the basic elements of internal control. This topic is about the policies and procedure established to achieve the specific objectives of an organization. So this set of procedure is called the internal control structure or framework. From the word in means inside, it is happening inside the company. So, ano nga ba yung mga control na napapaloob dito? Una, accounting control. It is about the accurate financial statement, kung kumikita ba o hindi ang isang kumpanya. Kapag tinignan ba natin ang isang factory, alam na natin na kumikita na siya o nalulugi na siya. How do we record a transaction? By the documents, journal entries, general ledgers, mga ganon. Like example, ang isang factory ay nangailangan sila ng machine or nasira yung machine, kailangan ayusin o kailangan nilang bumili ng bago kasi luma na or hindi na gumagana. So, mag-invoice na ng suppliers invoice, then ipo-purchase nila yung order nila. Then, kapag nag-match yung dalawa, ibig sabihin, tama yung supplier invoice na pinasok mo. Pero bago yun, hindi muna yun i-approve. Kailangan muna ipa-approve yun sa production supervisor na nangangailangan kayo ng machine. After nun, i-authorize nila. Then kapag okay na, saka na mapapasok at maipapasa sa accounting department. So, tulad ng nangyari dun sa Nestle Philippines, diba nagkaroon sila ng problema base dun sa asukal kasi nakita ng internal audit na maraming mga asukal na pinapasok. Yung pala is yung production supervisor nila is sinatawag yung ibang asukal at binebenta niya ito para kumita siya sa sarili niya. Pangalawa, the administrative control. Ano nga ba yung administrative control? It is adherence to relevant regulation, legislation, board policies, and authorities. Ano nga ba yung mga different government authorities? Na example, the BIR, SEC. So, halimbawa si BIR, di ba ang isang kumpanya, nagbabayad sila ng tax, ng tamang tax, lahat ng kumpanya nagbabayad. Even the employee. So, kapag nagbayad tayo ng tax, tinitignan natin kung tama ba yung binabayad natin. Kasi once na hindi tayo nakakapagbayad, magkakaroon tayo ng mga penalty or tatas yung mga interest natin. Next is the primary operational control. It is about the performance, profitability, goals of the company. Na example, kapag mas maraming produkto ang ginagawa ng isang kumpanya, possible na mas malaki yung kikitain nila. Pero kung unti lang naman yung produkto na ginawa nila, possible na tubo lang yung babalik sa kanila. Next is the internal structure of an entity is divided into two parts. First, the accounting, the control environment, and accounting system. Control environment, it reflects management commitment to use effective system of internal control, including management philosophy and operating style. Their characteristic may include the following management approach of business risk management attitude and action toward financial reporting, and management emphasis on meeting budget, profit, and other financial and operating style. So, this is the characteristic na yung sinusunod ng management base dun sa pagmamonitor ng business at saka para malaman yung mga risk na darating at kung paano ito mariresolve. Then, nagkakaroon sila ng meeting, yung management based dun sa budget, tsaka sa profit, at tsaka sa other financial operating style. Next is organization structure. It defines how activities such as task allocation, coordination, and supervision are divided toward the achievement of organizational aims. So, ito naman yung mga yung mga activities na or task allocation ng bawat isa. Like example, yung manager, ano ba yung task na kailangan niyang gawin? Yung mga supervisor, ano ba yung mga task na ginagawa nila? Yung mga HR, ano ba yung mga ginagawa nila? This is called organizational structure. Next, functioning of the board of directors and the board of committees. The board is responsible for protecting stakeholder interests, establishing policies to management. So, yung board members, sila yung board or yung director, siya yung humahawak or nagpo-protect do sa mga shareholders niya. Then yung committees naman, sila yung gumagawa ng mga decision ng mga importanteng issue, sila yung mga humaharap nun. Next, methods of assigning authorities and responsibility. So, authority normally arises due to the position of the boss to organization. So, siya yung merong authority na gumawa or magbigay ng position kung ano yung dapat ilagay sa'yo. Like example, nag-apply ka sa isang kumpanya, sila yung may karapatan na ilagay ka sa posisyon na yun or kung saan ka nila ilalagay at kung ano yung mga dapat gawin mo or mga task na i-assign sa'yo. Management control methods. Manager can use different control methods to regulate the behavior of individuals and units within the organization. So, yung manager, ang trabaho niya, gumagawa ng iba't ibang control methods para mapaayos or maging maganda yung isang kumpanya or yung mga nasasakupan niya or yung mga hawak niya. Next, the existence and effectiveness of an internal audit function. An internal audit helps an organization to achieve its goals by adapting a systematic approach to assess and improve the effectiveness of risk management process. Tulad ng example ko kanina yung nangyari dun sa NESE Philippines, di ba? Yung internal audit, maganda yung nagagawa niya o maganda yung trabaho na nabibigay niya sa isang management kasi sila yung humahawak or sila yung tumitingin kung nag-improve ba yung management process. Next, the personal policies and procedure. Human resource policies and procedure establish a framework that guide how your organization conducts itself on a daily basis. So, yung HR naman, yung human resources, sila yung nagbibigay ng mga tasks or ng guide kung ano ba yung mga dapat gawin. Like example, kapag may nagkaroon ng problema, sila yung re-resolve noon. Next, influence of external factors. So, external factors are the factors that are outweigh the control of a business. The example, yung mga competitors, minsan externals nasa labas Yung mga competitors na hinaharap ng isang kumpanya, yung mga social network, di ba? Meron na tayong iba't ibang mga social network. Then, yung mga suppliers, then yung mga distributors. Next is identifying the activities, risks, and control objectives. Control activities are the policies, procedures, techniques, and mechanisms that help ensure that management responds to reduce risk. Like example, yung isang kumpanya, like example, yung business na lang, milk tea, tapos sa lugar nila, nagtayo din ng isang milk tea shop. So, dalawa na silang milk tea shop, meron na siyang competitors. Paano nila harapin yung risk na yun? Paano nila malalabanan or paano nila mas papagandahin pa yung business nila para mas marami pang customer na lumapit sa kanila kasi meron na silang kalaban. So, example of control objectives, sales control objectives, ito naman yung parang papangalagaan nila yung sales nila. Control objectives can be classified into categories such as compliance, financial reporting, strategic operations. Titignan nila yung financial reporting, kung kumikita ba sila or nalulugi na ba sila, kung meron ba silang dapat gawin para mas lalo pang tumaas yung kita nila. Production or service control objectives is the provision of raw materials, equipment, machine, and labor, or delivery maintain. So, ito naman yung mga production or mga service na mga nangyayari. Like example, yung mga materials, yung mga equipment, yung mga machine. Maganda pa ba yung pagpapatakbo? Meron bang mga sira sa mga machine? Meron bang kailangan ayusin? Meron bang mga kailangan dagdagan? Or meron bang mga product na dapat, may mga bago bang product na ipapasok? Mga ganon. Administration control objectives. This is the motivate manager to expert a high level of effort to achieve the goals set by the top management. Like example, yung mga di ba, meron silang mga 13-month pay, mga ganon, yung mga nagbibigay sila ng mga incentives, kapag nagkakaroon sila ng Christmas party, binibigyan nila yung mga employee nila ng mga gifts na galing dun sa kumpanya. Isa yun sa mga administration control objectives para mas lalong ganahan yung mga employee nila na mas kumilos pa. Understanding control system, 5 general control objectives should be kept in mind. First, authorization. All the transactions are approved by the responsible personnel. Lahat ng mga pangangailangan natin, mga binili, mga ginastos, mga ganon, mga machine, mga ganon, kailangan authorize siya ng mga taong nasa taas or mga nasa loob. Pangalawa, recording. Ensure that all recorded transactions thoroughly appropriate measures. Even the small amount, kahit 50 pesos na expense lang yan, kailangan naka-record yan. Lahat ng mga ginagawa, kailangan recorded. Third, safeguarding, protect from harm or damage. Kailangan yung mga nangyayari or mga dumadating na problema, kailangan lagi tayong handa. Pang-apat, reconciliation, confirm that accounts in the general ledgers are consistent, complete, and accurate. Lahat ng mga sinusulat natin, mga nare-record natin, i-check natin yun kung tama ba, accurate ba, may pagkukulang ba. Once kasi na nagkaroon siya ng kulang or pagkakamali, hindi na siya magbabalance. Last is valuation. It is to track the effectiveness of your strategic decision-making process and provide the ability to track performance in terms of estimated change in value. Lahat ng mga decision-making natin is kailangan effective ba siya, lahat ng mga ginagawa natin. Like example, tulad din ng mga price, 'di ba? Sa mga product na ginagawa natin, hindi naman habang buhay 8 pesos lang yung biscuit, 'di ba? Tumatas din naman siya. Nagiging 9 pesos din siya base din sa pagtaas ng mga product, yung mga raw materials, mga harina, mga ganun, 'di ba? Kailangan tataasan din natin yung price na mga yung kahit 1 peso, mga ganun. Kasi kapag nag-stay lang tayo doon sa price natin dati, possible na wala tayong kikitain.
Good afternoon everyone. I am here to discuss the controls to use in your business. So, ano-ano nga ba ang mga ito? So, first, control and cash. So, cash, it could be coins or notes. Then, investment. These are the assets that its goals is to generate income or appreciation. Receivables. It is money owed to a firm for rendered services or products provided that have not yet been paid. Inventory in transit. It is a shipping term that refers to the finish of goods that have been shipped by a seller na hindi pa natatanggap ni buyer. Inventory in accounting refers to all goods, merchandise, and materials held by a business in the market to earn profit. Fixed asset. Assets purchased for long-term use in the business. Current liabilities. So, it's a company's short-term financial obligations that are due within a year or operating cycle. Contingencies. Well, first, include an assessment of contingent debt guarantees in the closing procedure. Companies tend not to review their debt guarantees on a regular basis, so the sudden failure of the obligor to pay can come as a considerable surprise, resulting in the recognition of large debt obligation. Second, it include an assessment of debt covenant violation in the closing procedure. It is not all uncommon for a company to be unaware of debt covenant violation until informed of them by the lender, resulting in the immediate acceleration of debt into short-term debt category. And it includes an assessment of debt covenant violation in the budgeting process and interim financial planning. So, what is debt covenant violations? So, it is sometimes inadvertently caused by specific finance-related activities that could have been avoided if management have been aware of the impact of their actions. Lastly, it includes assessment of all contingency reserves in the monthly closing procedure. Contingency reserves tend to be set up once and forgotten, although the underlying contingency may change in size over time. Debt in general, it requires evidence of intent and ability to recategorize debt from short-term to long-term. Second, require approval of the terms of all new borrowing agreements. It also requires supervisory approval of all borrowings and repayments. Debt extinguishment. It is the procedure in line to item to charge unamortized discounts or premium to expense proportionate to the amount of any extinguished debt. Convertible equity. So, it is a market value of equity on conversion dates when the market value method is used. And it also a market value of equity on debt retirement dates. Legal capital and legal Legal capital and capital stock. It is obtained to verify the valuation of stock issued in exchange for goods and services received. Stocks appreciation rights, or SER. So this is the method of companies given to their management or employees if that company perform well financially. Revenue recognition. So revenue barter. It requires creation of business detailing why a barter is required and what type of accounting should be used. Cash payments to customer, revenue recording transaction of gross and net, revenue long-term and construction contracts, revenues service activities, revenue recognition when collection is uncertain, revenue recognition when right of return exists. Accounting for leases. So, leasee, it is the tenant, the one who rented the property. So, lessor, it is the landlord, the owner of that property. Lease termination. So, match the date of the lease termination notification to the recognition of any losses associated with the termination. Translation of foreign currency. It gain financial statements, so gain external auditor approval of any changes in translation method. And lastly, translation of foreign currency transactions. So verify that all gains and losses in complete currencies transactions are updated in the periodic financial statements. So that will be all. Thank you.
Elements of internal accounting controls. 6 basic elements are necessary to meet the board objectives of good internal accounting controls. Number 1. Competent and trustworthy personnel with clearly defined of authority and responsibility. Number 2. Adequate separations of duty. Number 3. Proper procedures of authorizations of transactions. Number 4. Adequate records and documents. Number 5. Proper physical controls over both assets and records. Number 6. Proper procedures of adequate records keeping. The 3 levels of control. Number 1, strategic control. Manager wants to know if the company is headed in the right directions and current company trends and changes are keeping them in the right path. Answer. Strategic controls may involve the reassessments for a strategy to an immediate and forest event. For example, if the company main product is becoming obsolete, the company must immediately reassessment its strategy. Number 2, tactical controls. A tactic is a method of meets and specific objects in overall plan. Tactical controls emphasize the current operations of an organization's. Answer. A marketing strategies for a wholesale bakery might be an emerged solution for a targeted customer such as restaurant. Operational controls. Operational controls involves control over intermediate term operations and processes but not business strategies. Answer. Operational controls focuses more on internal sources of information and affects smaller units or aspects of the organization such as production, levels of the choice of equipment.
Good afternoon, everyone. My name is Delasara Jocelyn for BSBF 4E. My topic is food. Who is food? Food is defined as the intentional force of representation or concealment of a material fact for the purpose of introducing another to account it to his, her, or her injury. As defined by the American Institute of Certified Public Accountants, they have 4 types of food. first types is the management fraud. Management fraud is the based on the analysis of the activities of a company, institution, or the organization that are susceptible to fraud, disloyalty, or breach of the trust in its financial relationship. Then the second one of the types is employee fraud. Employee fraud is the attempt to defraud people seeking employment by the giving them false hope of better employment, offering better working hours or more respectable tasks, future opportunity or higher wages. For the third types of fraud is the computer fraud. Computer fraud is a cybercrime and the act of using a computer to take or alter electronic data or to gain unlawful use of a computer or system. Then the last is the financial reporting fraud. Financial reporting fraud is the intentional overstatement and or understatement of balances in the financial statements. They have some causes. First is the poor internal controls or a poor internal control environment. Internal controls are the systems, regulations, and procedures put in place by a firm or organizations to assure the accuracy of a financial and accounting data, encourage accountability, and prevent fraud. These controls can assist enhance operational efficiency by enhancing financial reporting accuracy and data. The second of the some causes is the existence of heavy financial pressures on individuals. Financial pressures arises from any situation where money worries are causing stress. It may relate to debts you are facing now, or financial concerns you have about the future. It could be about actual or feared changes in work or personal circumstances that affect your income. Then the last of the some causes of fraud is the other sources of pressure is contributing conditions. The sources of pressure is usually develops over time. It can happen because of unhealthy lifestyle choices such as not getting enough regular physical activity. The next topic is the management override. The term management override refers to the ability of management and or those charged with governance to manipulate accounting records and prepare fraudulent financial statements by overriding these controls even where the controls might otherwise appear to be operating effectively. The responsibility for an effective internal control system rests with management. Some of the areas where management override is more common include reserve estimates, depreciation allowances, sales, cost of sales, and the last is the deferring expenses. The next is the auditing for fraud. Fraud in audits is when an entity is found to have illegally altered financial statements to manipulate its financial health or to hide profit or losses. It is severely punished since fraud undermines the trust that is the bedrock of the global financial system. Auditing for fraud especially for small-scale fraud, is like looking for the proverbial needle in the haystack. There are several reasons why is it so difficult to find. First is the too many transactions, then the second is the ineffective use of an audit, then the third is audits have time limits, fourth is trend analysis is not sufficient, fifth, perpetrators knows the procedures, then the last six is the fraud is hard to recognize.